Hello and welcome to BQ Prime. Earnings seasons continues on BQ Prime, and we've just turned the noon hour on the clock, and we're looking at the earnings of a large housing financier lender today. PNB Housing Finance declared its earnings earlier last evening, and its profits grew significantly by 64.7% year on year, 279 crore rupees in the final quarter of FY23. While the net interest income was also up substantially, there was a reduction in margins that was observed on PNB Housing Finance's book as well. To discuss this and a lot more, we're now joined by Mr. Girish Kousgi, the MD and CEO of PNB Housing Finance. Thank you so much for joining us today, sir.
Thank you. Good afternoon.
And I'm looking at the numbers here, good growth in net profits, good growth in core income as well. I was just wondering, just to start us off, the AUM itself was somewhat flat year on year and quarter on quarter. I know some of it is because you're focusing on de-risking the book and also reducing the corporate book. But just on that offshoot, how long will that de-risking continue to be the priority as opposed to growth?
Yeah, so if you look at retail, because our focus now is on retail. So retail book growth is 10%. And if you look at disbursement growth on a YOY, it is 22%.
Right.
And sequential is 31%. And full year disbursement growth is 33%. So on retail, the growth is 10%. On corporate, it was a conscious call to degrow the book. Since we had very high NPAs. So now we have worked on NPAs. We were very keen on resolution. Now we have brought down GNPA to a large extent on the corporate side. So we have just 2 accounts on the corporate side. So maybe it's only a question of time that we will restart corporate business in a totally different form. So till such time, obviously, if you look at overall book growth, that will be skewed. And therefore, we should look only at retail because our focus is now on retail.
Okay, understood. Now, one of the things that has also, kept AUM tepid or kept AUM slow has been higher repayment rates that we saw over this quarter. Any specific reason as to why you're seeing higher repayment rates in the final quarter and maybe somewhat in the quarter preceding that as well?
No, actually, repayments have not gone up. Actually, if you look at corporate book, in last year, the book has come down by 48%, and it was a conscious call.
Okay.
If you look at retail, so we have a very good retention strategy, and we have grown both on disbursements and book. So if you look at overall, the growth is 2%. If you look at retail, it is 10%. So largely, overall 2% is only because of corporate book degrowth by about 48%. Yeah.
Okay, understood. One of the things that I also wanted to focus on is you started disbursing in the affordable housing segment in the final quarter of FY23. Overall, in the industry, there has been some data and some reports that says the higher interest rates have had a somewhat negative impact on affordable housing. The demand has slowed down. What are you observing, given that you've just entered the segment? Is there optimism in the segment, or would you say it's more like tread with caution and find the right pockets?
I think in last few quarters, the rates have gone up. And obviously, this would have had some impact, in terms of customer servicing ability. But looking at the segment, affordable segment is very, very potential. And even if you look at the portfolio quality between, let's say, prime and affordable, I think the gap is not very substantial. In the sense, asset quality on both prime and affordable is almost similar. There is slight difference. So in terms of portfolio quality, affordable book will be good. In terms of demand, there is slight dip in demand that is more to do with sentimental reason because the interest rates have gone up substantially and those interest rates have been passed on to the customer. Yeah. But from a mid-term to long-term perspective, affordable segment has huge potential to grow. It also has the ability to give higher yield for the companies. And therefore, we are also pretty much focused on affordable. Last quarter, we started. I think this year we will have a meaningful contribution from affordable segment.
Okay. Can you quantify that meaningful contribution a little more for us? Like how much of your top line, say, you would say would be driven by the affordable segment?
I think let me talk about disbursement mix.
Sure.
So incrementally, affordable business would contribute to 10 to 11% of incremental business.
Okay.
And ideally, we want to take this up to 25%. I think this year is going to be about 10 to 11%.
Okay, okay, understood. Now, PNB Housing Finance also concluded a rights issue recently, which was oversubscribed. Some of the objectives for the money raised that you've mentioned are geographical expansion and also the affordable housing segment expansion. Can you expand a little bit more on what geographies are you specifically targeting there? And is there an overlap between the geographical expansion and the affordable housing expansion there as well?
Yes, we recently concluded rights issue and it was oversubscribed by 1.21 times. And this is for growth. Okay. So we are going to use this for growth both on prime and affordable. Okay. In terms of prime and affordable, so we have two totally different architecture. For prime, we have different set of branches. For affordable, we have different set of branches. We have 82 branches which would cater to affordable business. In terms of geography, it is almost the same, but in terms of pockets within the geography is different. For example, you take any city, depending on the pockets, we will have either a prime branch or affordable branch. Okay. On affordable, I think we have also gone to small towns and cities. So in terms of, because we have potential for affordable in metros, large cities, tier 2, tier 3 and tier 4 cities. For prime, also we have potential in metros, large cities and tier 1 and tier 2. So within the given city, the pockets are different. But we have a different architecture, different set of branches, different team to cater to these two different business because the customer segment is different. I think these are two different businesses altogether. Okay. But yes, the architecture is totally different.
Okay, understood. I want to talk a little bit about the net interest margins as well. Now, I know there's a de-risking going on, so of course that will have somewhat of an impact on net interest margins, and they were running quite artificially higher because the full cost had not been passed on in all aspects, right? But can you give us like a band or a trajectory for net interest margins that you may be targeting for FY24? Is this where we should expect net interest margins to stay, or is there room upwards or downwards according to you?
I think spread of 2.5 and NIM of 3.5 would be ideal for a company like PNB Housing.
Okay, so you're expecting it to stay around 3.5. You're around 3.74-ish right now.
It will be around, NIM will be around 3.5.
Okay, NIM will be around 3.5. Understood. One other thing that I want to touch upon here is on the liability side. Now, we've had banks increase their exposure to NBFCs and housing finance companies considerably over the last 2 financial years. And now there were some concerns being raised that banks are now hitting their internal limits on how much they can lend to NBFCs or housing finance companies. How do you plot out your liability or your fundraising trajectory? I know you did the rights issue as well recently, but on borrowing from banks, how are you plotting that into your trajectory? Have you faced any of those concerns with banks you work with?
I think we have not faced any challenge. And also with the recent rights issue, and also performance improving in all the parameters in the last couple of quarters, be it disbursement or book growth or on the asset quality. I think overall there has been a very good story. And with rights also coming in, we feel that the borrowing cost is going to go down for us because I think very soon probably there could also be some kind of rating upgrade. All these things together, we will have access to cheaper funds. B, our cost also would go down. Right. And having said that, today we have so many banks. We have de-risked that. We have foreign, private, and PSU banks. Right. There are too many banks, and obviously these limits wouldn't really make that much of a difference as long as the company is doing well. Right. So we will be able to raise funds and at a cheaper rate going forward.
Okay, understood. Now, I just want to get some sense from you on how these results have been perceived by your investors and shareholders as well. I know it's hard to gauge what the market is thinking. It's like a crystal ball. You can never really figure out what exactly it's saying. But I'm looking at the results right now, and the stock has taken a bit of a hit. It's down 3.17%. Do you think this is some shareholders also having a moment of question, a moment of skepticism? And if you were to reassure them about, PNB Housing Finance being a strong stock, how would you go about it? What is your overall message to them, given the stock reaction that we've seen?
I won't be able to comment on that, but let me tell you what has happened in last 1 year. Sure. See, if you look at the GNPA last year and this year, the drop is more than 50%. Yeah. And if you look at a corporate book has grown as per plan. And if you look at the GNPA within corporate, it is just 2 accounts. I told you, I've given you some specs of those 2 accounts as to how comfortable we are as a company.
Right.
On the retail side, quarter on quarter, there has been a drop in GNPA, and going forward, our recoveries are going to be much higher than slippages, which means our GNPA will keep coming down. And probably in next, let's say 4 to 5, 6 quarters, we would be comparable with some of the best managed companies in the housing space on GNPA. There has been a very good story on disbursement, very good story on book as well.
Right.
And we have started affordable, which means there is a possibility of a higher growth. B, the yields would improve, which would also have a positive impact on spread and NIM.
Okay.
So this is the performance of PNB Housing in last 2 quarters and for the whole year.
Right. Yeah.
So I would not be able to comment on how the investors would perceive or how the market would perceive. I think it's best left to them.
Sure. Fair enough. I appreciate your candor on that. I want to sort of close us out with an overarching question that's been on the minds of housing finance companies across the board, right? You have a big merger going on. By July, it's expected to be complete. That'll open up some room in the market for everyone, both on liabilities and on the asset side. Is there any thinking on how PNB Housing Finance wants to capitalize on that opening? I know separate corporate actions is not something you can comment on, but from a market strategy, how do you see this fitting in for PNB Housing Finance?
I think market is quite large.
Okay.
Market is, and demand is robust. Real estate space is doing well since last couple of years. I think after COVID, it started doing well, and now I think the run is going to continue for next 4 to 5 years time. And we feel that we are in a very good spot, and we can take this opportunity to grow on the retail side because we have now added affordable to our kitty, so we'll be able to grow at a much faster pace. Now, having said that, there could be some little bit more opportunity, which might probably open up both on liability side and on the lending side, which we would capitalize.
Okay, understood. That makes complete sense. Thank you so much again for joining us, sir. It was great getting the update from you, and we look forward to how PNB Housing Finance, plots the rest of its trajectory for FY24. Thank you so much for watching. It was a really informative conversation, and we'll keep bringing you all the market updates that you need. Keep watching. This is BQ Prime.